where we talk with ASX companies and listen to their stories and hear what they've been doing. We're at the UWA Club here in Crawley at the University of Western Australia. Today we've got Barry Cahill here from Cyprium Metals. Barry's talked to us about what they've been doing at Nifty and Nanadie Well previously, but we're coming back here today to get, to hear what's been happening and get an insight into what makes Cyprium unique. So Barry, welcome.
Thank you.
Welcome back to Coffee with Samso on the weekend, the grand final weekend. Barry, look, we've had a few conversations previously about what you guys are doing. Maybe you can just start off, just give us an update of what's been happening, and then we'll get into the gist of it.
Yeah, no worries, thanks. So basically at the moment we've been really busy moving forward with our restart study, so compiling the document and all the reports. We're continuing to drill into our existing resource to fill the gaps, convert inferred resources to indicated and measured resources, designing and optimising the open pit, and we've started refurb of the SXEW. The next part of the process is we'll compile all the assay results we're getting, which are starting to flow at the moment, and I expect a release to come out shortly regarding some of those results, and move to our finance process, raise our finance. We've been moving forward, compiling our environmental approval documents, and we'll be submitting the first of them shortly in the next couple of weeks, and just moving the process forward, employing people. So pretty busy, but just charging along to that goal of producing copper on site as quickly as possible.
Yeah, I mean, I'm sure like a company like yours would be busy. I wouldn't expect you not to be busy.
No.
But look, there's a part of Cyprium that I wanted to bring out to the viewers, because you and I have been talking before, and Cyprium's not quite the sort of atypical copper company as we would understand it, right? There's an element in there where you want to go straight to making copper plates. Can you just give us a rundown on that story?
Yeah, certainly. So as most people will know, when you go into mining, there's stages of beneficiation or value add that you get to. So it can be as basic as shipping broken rock like you do at iron ore, or you can then crush and grind it up and produce a concentrate like copper concentrate or a lithium concentrate, which we've seen some news about lithium. Obviously they produce a concentrate, and then so if you go back to like the iron ore, that's sent overseas, it goes into a blast iron furnace and it produces steel products. Same with a lithium or a copper con, it goes overseas, it goes into a furnace or a smelter or some other process, and then a metal or a product is produced to be used for manufacture. And then the third stage is actually to produce a product that is already basically pre-manufactured. And it's the value add chain. So the cheapest price you get is for just the rock. The next most expensive price you get is for the concentrate, and the most expensive price you get is for the finished product. And the whole focus about Cyprium and its copper strategy has been about producing a finished product, which is our copper metal plate. And then what people say to me, well, what happens with copper metal plate? Well, copper metal plate gets put into an arc furnace, it produces an extruded rod, and then that's turned into copper cable and tube. Whereas with those other processes, there's another series of processes after the rock's delivered to a blast furnace, and say pig iron's made, and then steel and all that sort of stuff. But all the value add is up the chain, it's not down the bottom of the chain. So we want to be as high up the value add chain as possible. And what that does is it reduces your cost, because you're not paying someone else to do the processing, but also increases your revenue, because you're not sharing that revenue on the revenue side. So that's really what the drive of our strategy is. Notwithstanding that we can do all those other things, because as resources people, you can do all those other things, but the top of the value chain is where we're targeting.
When I look at Cyprium now, you've got the Nifty operations, you want to call it. So you've gone past, to some degree, the exploration, trying to find a resource. It's there now. So the business is really about what you've just described. that making of the copper plate, the process or the start of the process. When you guys, when you're processing, right? I'm thinking copper processing plant, but you're heap leaching, right?
Yep.
That's your processing, right? Heap
Yep.
leaching. And as we all know, whoever understands heap leaching, it's not as simple as putting a pile of rocks on and throwing some chemicals on. Can you sort of elaborate on that?
Yeah, certainly. So if we look at a rock, so this is actually a bit of nifty ore, and it's pretty blue, and as a geologist you'd understand what all those rocks are. So this
I pretend to anyway.
like me, because I'm a mining engineer, so I actually don't know. But anyway, so it's an oxide ore. The pretty blue is an azurite, which is a copper mineral. The green, there's a green malachite and a bit of chrysocolla in that rock, and that's the oxide. So you have this sitting up there as the oxide. Underneath you have what's called a chalcopyrite, which is like a secondary sulfide mineral, and I don't have a sample of that, sorry to say. And then underneath that you have a chalcopyrite. So each of those zones, those three zones if you like, requires a different treatment method on heap leach. Most of the concentrate that's produced in the world is basically chalcopyrite, because in terms of a heap leach, chalcopyrite's difficult to leach. It's a slow leacher. So it's not impossible to leach, and I can go through the whole chemistry of them all, but each of the chemistry is very different. So you look at this rock, we can crush it up, we crush it up to a particular size, we add chemicals, and then these copper minerals will leach. And to show that, I've also got another picture. So they're crushed rock. So this one's actually from Holland Air, so it's a different style of rock, but the process is the same.
So that's crush
like that, yeah. So going from that, you blow it up and then you crush it. And you can see in this oxide there's similar green minerals. So I'll show you that one. This one's from Rapier, which is at Kew. But you can see green mineral. And this one here is from Mount Elia. So again, just green mineral. So quite simply. So then we crush that up. It basically looks like that. You've got fines, you've got coarse. This one is a sulfide rather than an oxide, because I don't actually have a sulfide rock. So this has got chalcocite and chalcopyrite in it. And we've successfully leached this, which is one of the reasons I bought that. So basically each rock is different. You treat it differently, so you might have different particle sizes, different chemicals that you add, different irrigation rates, all sorts of things to treat it. But you do that, whatever you do, and that's our intellectual property about how we do that. And you can see, same rock, but it's already gone a bit green because the copper has turned into a copper sulfate already in those two samples. So you've gone from just a dry crushed rock, you've done whatever treatment before you put it into the heap, and you can see it's already started to extract copper. And then basically when you put the fluid on it, that's what you end up with. And this is really sort of heavy, strong copper sulfate solution. What you do then is you clean it up through an SXEW. So once you get into a solution like that, it becomes like a manufacturing plant. So the SXEW is like a manufacturing plant. So all it does is it takes the copper out of here into a clean solution, puts it into a plant, and there's an anode and a cathode, which are these basically two plates.
So that comes out of the leach pad.
Bottom of the heap leach, exactly like that. So that's actually out of the bottom of that. So when we put the acid on there, that's what came out the bottom. So, which is unusually clean. Usually it's a bit dirty, and that's why you do this upgrade, this manufacturing process. So you turn that into a clean fluid, and it looks like that.
Yeah.
And then you've got like an anode and a cathode go in there. So a lead anode, stainless steel cathode, run electric current into it, and the copper will plate onto the cathode and give you pure copper, which is what this is. Pure copper, and I've actually dragged that off a cathode at Nifty, because when the plant was shut down there was still some cathode on it.
Okay.
So this is quite thin, it's almost like a foil, but normally it'd be 4 to 6 millimetres thick. So then that's the cathode, so then that gets stripped off. So the copper gets taken out of solution into this cathode, and then this cathode is sold overseas. Basically, we've sold this stuff all through Asia, into India. There's some places in Australia that'll take it, but generally into Asia. And this is what's put into like a blast furnace or an electric arc furnace, and then they'll extrude copper rod, and that's an oxygen-free copper rod. And then that's what's turned into copper cable and copper tube. So you can imagine the start of the process. So some people are selling that, then the concentrate in that middle order, which we don't deal with, and we have not dealing with yet, and then this metal.
That's the prize, right?
That's the prize. because what happens with each of those products is that someone else will take it through those stages, whether you deliver ore, you deliver concentrate, you deliver cathode, they'll take it through those stages and produce that product. And then that's turned into the cable and the copper tube that is sold back to us, if you like, for construction, for our houses, for our phones and all that sort of stuff. So the prize for us is this, and that's really what we're focused on, and particularly at Nifty. And the key to it all is that heap leach, because the heap leach is what puts it in solution. After that stage, it's a manufacturing process. And as I say, the different minerals require different treatment. These oxides and those sort of things, very easy. Chalcopyrite, which is that secondary sulfide mineral underneath, very easy. The chalcopyrite's difficult. And that is the holy grail of heap leach, is to actually get that chalcopyrite production. And the chalcopyrite leaches, but it's a very slow leach. And what you're trying to do with your herbs and spices, your recipe in the heap leach is to steepen that curve so you get the extraction quicker and you get basically a commercial operation.
So what kind of timing, when you say it's a slow leach, right? Well, what are we talking about?
Well, normally if you just put chalcopyrite in a pile and try and leach it, years and years.
10 years?
It just depends on the pile, but yeah, 100 years, 1,000 years, 10,000 years, long time. But then you look at the way we look at it, we try and steepen up the curve, so 300 to 600 days to get 80%, 90% recovery. Chalcopyrite as an example, 100 days, 95% recovery. We're looking at, with our retreat, we've allowed 12 months, 85% recovery for this, which is slow. We can do it quicker, but we're being conservative with our recovery curve, so that's what we've allowed for. So it just depends on how well you can get the mix going and the heap going and the parameters around the heap. And that's really where our intellectual property and our operating property is. And that's really what we're trying to produce, is copper metal.
So your IP is what it will make this thing work the way you want it. That's the key, right?
Yeah. So that's what's in this flask. So when you have a look at these stages, you start with that. That's our intellectual property, and then you get that. Once you get that, it's easy. So that's our intellectual property in that flask right there. So how we manage to get that stuff to turn into that copper sulfate. That's what we do. And there's lots and lots and lots of tools that you can use to do that. And I think this is where people get, because it gets really technical. There's a lot of chemistry, a lot of equations. There's bugs happening in there. There's heat and air and all sorts of solutions. And that's where people struggle a bit with the technical part of it, is because there's all these parameters that affect this chemical equation, and if you get the parameters right, it happens as you want it to happen. If you get the parameters wrong, it's slow. It's slow, and that's the issue. And then this is where we think that we've got some skill.
So someone who just listened to you say that is going to, the first question, well, coming up will be, what's the room for error? Obviously, you got to get your recipe right, as you said, right?
Yep.
And this amount goes in at this time, and etc. How much room for error, and is it something that is very critical if you miss one step, or you?
Yeah, it is. Yeah, it is. And what we've got to understand is that 20 to 30% of the copper in the world is produced from heap leach. South America, North America, Asia, places like that. Fundamentally in this country, we're not very good at it.
Yeah.
We've just got to face that, right? And the reason we're not very good at it, and I keep saying this repeatedly, is that we don't get the parameters from the lab and transfer them effectively to the field. And that's the problem. And when you understand how heap leach works, if you see what the parameters were in the lab and you walk into the field, you can tell where they've gone wrong. And the problem with heap leach, of course, it's not like it's going through a treatment plant, you come in 1 hour and there's a problem, you make an adjustment and you lose an hour. You're putting down millions of tonnes. So, and that's the problem, and you're waiting time for it to come out. So if you make an error in terms of transferring those parameters, then you end up with 1 million tonne of material and no copper coming out of the bottom. Which, to tell you the truth, rarely happens, because it's the rate of the copper coming out that you really want. And it's about whether the copper's coming out at fast or it's coming out slow. And even with what we do, we have a number of other tools that we can do. If we think the copper's coming out too slow, we can accelerate it. We can do things in the field to actually make it come out quicker. So it is. I mean, for some people, because of the technicality of it and they don't understand it, it's very easy for someone else to frighten people about that, you know, and I think that's part of the problem. But what people have got to understand as well about how these things work is when I talk about recovery, the recovery curve is artificially terminated. So what I do when I look at recovery and I say 85% or 80% in 12 months is the curve keeps going. But what I do is I draw a line at 12 months and I terminate it. And I say, right, that recovery is 85%, but it's not because it keeps going on and on and on and on. And again, that's what people forget. They say, oh, if I put it through a concentrator, I get 95% recovery. Well, that's fine, but you also lose 15% of your revenue because you're giving it to a smelter. And by the by, I've artificially terminated that because of commerciality, but the heap still sits there and it still produces copper. It's just that I don't allow for that when I do my calculations about mine life and things like that. But effectively in the field, that copper still comes. So that's the other thing that we miss.
Because I think one of the, I spoke to one of the guys who came on Coffee with Samso. I won't say who it is just in case they don't want me to say it. But he was saying, look, and we had a discussion about you guys, right? And I said, oh, I love that story because, you know, what you guys are doing is heap leaching, and every major copper producer in the world does it. And we're talking big guys, big porphyry guys, the ones in South America, the one is in Indonesia. They're talking about, he said, millions of tons and the pile, and they're making it work. So it's one of those things where, you know, it's like saying a surgeon will tell you it's a easy procedure, but it's actually not an easy procedure because for somebody who's not been doing it. So and it just works, right? I think that's important because, as you say, and I've always said this, is that people in Australia think when you say, oh, I'm doing heap leaching, oh, that's sort of oh, you couldn't get it to work another way, therefore you're doing heap leaching. Is that your gut feel?
I think it's a lot of things. I think when you look at metallurgy, producing concentrate's easy. Like you can go and do a couple of tests, you can go and build a plant, you can go and produce concentrate, it's easy. When you get into heap leach and you're new to it, the monitoring and how you set it all up and the management of it is it's not difficult, but you've just got to get used to it like any process. And I think we're just used to this immediate result from concentrators and gold plants in particular, where you get this immediate result, you pour a gold bar and off you go. And I think once things are a bit over time, you have to pay a lot of attention to controlling and managing the heap. And I think it just is a bit too difficult for us to comprehend with our background. That's what I really think. But the chemistry is undeniable. I mean, the chemical equations have been around ever since chemistry was invented. And I keep saying this to people, it's a matter of accelerating the rate of reaction. And when people say, oh no, the heap leach doesn't work because this doesn't leach or that doesn't leach, that's not the case. It means it's a slow leach. And the whole idea and the whole way to crack the principle is to accelerate the rate of leaching. The chemistry works. So that's really what we're dealing with. And there's a lot of things you deal with. Like you can go and read all the research about heap leach. You know, there's catalysts and there's chloride leaching, there's catalytic leaching, there's, you know, everyone talks about ferric leach, bio-leach. You know, there's all these different leaching styles and things people are doing, trying to crack this chalcopyrite holy grail, if you like. And all of it is about accelerating the rate of reaction because the reaction exists. So yeah. Yeah,
I remember people talking about vac leaching and stuff like that, and that was when the first light bulb moment I thought, oh, it's heap leaching is, you know, like the old saying, oils and oils, right? It's every heap leach. Is it so? From what you guys are doing, is there a point in time or a step that you guys go, hey, you know, let's be double sure about this, because if this is the critical point, if this doesn't happen, that will be very bad. Is there that critical step in that process?
Yeah, so the way we work when we're doing the test work, we try to run because you do column test work, so you basically crush up rock like you do in the field, and you put it in a column and you do a test. We try to run column by column at the start, and we have a look at the mineralogy, we set up the parameters, we have a go at the column. We've been pretty. I mean, Nifty wasn't so hard because there's so much test work being done with it, but with Holland Air we got it pretty right with the first column. So then once we do the column, we get some parameters, we look at what's happening, we then look at the commerciality of it. And you know, you increase the commerciality by altering parameters, and each column you sort of only change one parameter. And then slowly but surely you basically get to a point where you've optimised it, you set the parameters and then you go. So what we're doing with Nifty is, because it's been done previously, we basically run quite quickly through 3 columns. Where today, stacking our 6 metre column. That column works, that'll give us our set parameters. We then put that into our restart study, we go and finance on that basis, but then we go back in the lab because we've got some ideas about how to make it better. But we made it really good, we think we made it really good now, and this column will test that. And then we'll go and optimise it even further, because it's all about commerciality. That's all it is. It's all, you know, it's all about making money out of it. So how do we change that to either drop the costs or steepen the curve to increase the revenue flow? And that's how we work. And when you actually go out in the field and you're doing millions and millions of tonnes of heap leach, you're still running columns at the site to keep improving on the parameters you have. So that process never stops, because if you can change a parameter, particularly in a heap that's already down, and you can accelerate that last bit of copper out of it, you make reasonable money on it because you've already sunk all your costs into it.
Is there such a thing as a pilot plant in heap leaching?
Yeah, there is. So you do, you know, 10,000, 30,000, 100,000 tonne heap and test the parameters. And that was actually done at Nifty in the early 90s. They did a 30,000 tonne heap. Yeah, so yeah, it's done. It was done at Wetar as well.
And they translate, the results translates pretty well across to, you know, 1 million tonnes or? Yeah,
the results that you get generally give you some direction about how to improve in terms of the field. And at Nifty, yeah, they did. So some of the things about Nifty originally was about permeability, so agglomeration and those sorts of things. And we've got all the rolled reports and we've read through all of that, and we've made allowances for that sort of stuff in our test work. But all the information's there. There's a few other things that we identified that's part of our recipe that fixed it anyway, but you know, just convinced us that we're on the right path. So there's a few things like that. And we've looked at the mineralogy, we've looked at our recoveries. Because the heap leach retreat's mixed up, there's all of these minerals are in there, and we're seeing the dissolution of all the minerals, including the chalcopyrite. So yeah, so we're seeing the results that we expected.
Is there any elements or metals or part of that chemistry process that you could not have accounted for while you're in that, you know, waiting for the blue fluid to?
There's lots of things that you can't account for, so you've got to be careful, because the mineralogy is affects all the way through. I think what the interesting thing about Nifty was, we found minerals in there which I won't go into, but we found minerals in there we didn't expect. So I found that interesting after a site that had been going for 30 or 40 years, that we found minerals that we didn't expect. And we find that with quite a few projects, that we find minerals that we don't expect, reactions that we don't expect. But the sequence of leaching, again, chemistry is quite well known. So again, it's experience. You know, if your experience in that field is that area, then you start to understand problems. Because there are metals that go into solution that are huge problems. And Nifty itself had a problem with manganese. So when manganese goes through the SXEW in the manufacturing part, it causes all sorts of problems in the EW. And they had a problem with manganese. And then that was fixed up as the plant was run. They put in different bits and pieces to fix that problem. And we're making sure that those bits of that plant are put back into that plant, like clay filters and things like that get rid of that manganese problem. And again, we've got our own knowledge that we're going to add to that plant to stop issues happening that we've seen before. And in fact, you can grab any. In fact, I've got a meeting with some SXEW guys from another country, and they put things into their plant that they see with their ore type that affects how it all works. So a lot of it's really knowledge in the head, just like it is in a gold plant, you know.
And as we know, copper's price is buoyant at this point in time, and looks probably most likely it will be, going forward rather than backwards in the near future anyway. Can't speak for too far ahead, but what's the critical price limit for someone like yourself that you go, oh boys, we're getting worried here? Is it?
Well, the reality at Nifty is we tried to kill it with copper pricing and couldn't, which is why we bought it. But there's a lower limit. So once copper price goes below $250 US a pound towards $2, everyone gets really, really tight and difficult. Considering that we think our projected all-in sustaining will be around the $2 mark. So when you get down to that rate, yeah, you get really, really tight. And that's why we're pretty happy with $4 where it is at the moment. It's just amazing. But we did it was really robust at $6,000, which is take 50%, take 30% off the current price, and we're still robust. So, but we're not producing copper metal plate now. You only get the price when you produce the metal. We're not producing the metal. As you say, who knows what's going to happen in the future?
And in every discussion that I'm having these days, you couldn't go without using those three-letter words, ESG, right? I always think that because we're moving to that industry, that it's going to add additional costs to operations, correctly or incorrectly. That's just my thoughts. But if that happens, do you see this setting a floor for copper pricing? Because everyone still needs copper, right? We can't live without copper, full stop. So you can't not have copper. So yeah, if you can just share your thoughts on that. Obviously, you're in that industry.
Look, you can't disagree with it. Anything that adds cost. So it's just market economics. You've got to produce at less than the current price, and if something's adding cost, then operations shut down. And we've seen that with iron ore. The iron ore price plummets, operations shut down. There's a shortage of iron ore, and the price goes back up. But ultimately, for the consumer who's demanding a particular standard, get ready for increased costs because you've got to pay that price. And it's the same with deleterious elements. We talk about not shipping deleterious elements overseas, so we've got to treat in situ and dispose of deleterious elements. We're not shipping them to another country. There's an increased cost to that, so get ready for an increased cost on that. Producing more acceptable to society, more acceptable outcomes in the industry, it all costs money, and it adds to your cost base. And if the revenue side doesn't go up, then you don't get production, which means automatically the revenue side goes up. So it's just economics. So get ready for increased costs. Yep.
I mean, again, going into away sort of from the chemistry and things like that, into your potential ore resources and your other projects, how's the Nanadie Well going?
Really well, but we've actually internally we're trying to correct our progress there, because we just don't at the moment, and we don't want to focus on Nanadie Well because we're focused on Nifty, but there is a lot of data coming out of Nanadie Well that we haven't done anything with.
That's why I asked the question.
Yeah, we haven't even produced a resource. I mean, we drilled out the green rock like this to produce a resource in the green rock, and we haven't even produced a resource. We've got the data. We just don't have the people and the time, and we are really focused on Nifty. So we've actually taken our group of resource development people, and we've put them on Nifty to help Nifty out. Nifty will man up, and then we'll move them back. We've actually internally had meetings about, right, how do we make this happen quicker? Because we've got all this data now that's building up, and we need to work our way through the data. So luckily for us, the non-drilling season's coming up, because it's the wet up that way. So the people will come off the rigs, and hopefully we can catch up. But we've just got to get some more resources in to fix that up. I'd like a green rock resource, and I'd like some more drilling at Nanadie Well overnight. The core's coming down to do the metallurgy. It's on its way down to our warehouse. The core's coming down for Nifty for metallurgy will work. They're drilling a Marucci door. So all this data's just pouring in on us. Our poor metallurgy blokes are like drowning in me asking them to do different columns on different projects. So we're just, we've got to re-resource up and try and get that information out and kick those projects along. But please be patient. It's all coming, but Nifty has got to remain our focus. We need to get into copper production and start making our own cash flow.
Yeah, I think, you know, some corporate guys will be going, you know, Barry, you could spin that out too.
Yeah, I see a lot of that. You keep saying that. Yeah, but we're a builder. We want to build things. And I've got the team to build them. We're building a team that's going to continue to build. So, and again, that's what our internal discussions have been around, is that, you know, normally we'd get into construction next year and then we might start looking at how we're going to split our team out to do the next one. Well, maybe we'd do it a bit earlier.
I like Nanadie Well. I think it's perfect for you guys because you can see that that's going to develop into something bigger. And, you know, from a producer point of view, that's what you want to do, right? You don't want to keep having to go out and acquire other operations, right? So, but it is, it's more and more I look at it, it's looking really good.
Yeah, no, I agree with you. I really like Nanadie Well as well, and I keep saying to everyone in our organisation, let's not get a big head about the fact that we might have got something that's really nice. I think some of it, you know, we're pretty lucky. And while we keep telling ourselves that we're a bit lucky, maybe we'll work harder at it. So, and I think everyone agrees with us on that. But it is, I like it too. And it's a surprise. There's surprise as the silver in that crackle breccia there. What a surprise that is! You know, look at the silver grade. And we're like, our guys can't wait to crack into that and unravel that mystery there. But I've got them by the scruff of the neck and taken them up to Nifty and Maroochydore and said, you need to be here. And they're like, you know, they want to get into it as well, but they understand that our development process on Nifty is the most important thing we're doing because we've got to produce copper metal. And then when we produce copper metal, then that funds us to go and do those other things. But yeah, all our resource development guys, they want to get back to Nanadie Well, and they're drilling at Maroochydore and they're amazed by what they're seeing at Maroochydore as well. But we've got to say, no, Nifty is the priority. The resources we have available needs to ensure that the Nifty work is undertaken so we can meet our timelines. So yeah, it's hard. It's hard for me. I'm really excited about those projects as well.
Look, I think in the copper space in Australia, I think you have to be the most exciting member of the ASX at this point in time, and your market cap is still good since we first had this conversation, and that's what I like about it. It's, you know, to get that exposure now in copper in Australia. I don't know whether there's anyone else at this level.
No, I don't think so. I don't think so. And I mean, I've been questioned about, you know, our market cap and our share price and things like that, particularly over the last month.
I like that price, by the way.
If you're buying, yeah. And as I keep saying, like, we're not out there drilling, you know, deep holes and building a big resource and getting into that, you know, that really fantastic growth appeal sort of thing. We've got a big resource and we're developing it, and you're sort of on the down run of that sort of J curve before you take off in terms of, you know, your exploration success, and then I'm in construction, and then I take off. We're in that there, and once we get in production and we're all standing smiling in front of a bit of copper plate that's worth money, I think, and this is what happened previously to us, is it all takes off then. Because of course then I free a group of people up and they go and do Nanadie and we get all that stuff coming out. But the ultimate focus and what we've promised our major shareholders who've backed us for that is to produce copper. That's why they've backed us. That's why they hold 60% of our stock. That's why I'm holding my stock. All that appeal that the market really likes, that'll come. But I'm not interested in trading my shares. So what does share price mean to those people that are holding, looking for copper production over the next 12 months? It doesn't really mean a lot. But as you've already pointed out, it's a bloody good time to buy.
Oh, mate, I think you're like everyone else in this kind of situation where all the skeptics are out looking, and everyone's and the ones that know are holding or buying, and they're just waiting for that proof of concept, and then everyone's rushing in, right? Because by the way, it's just the Cyprium, you know, but it's flying. But it happens all the time. But it's that lag time that is the test of patience, right?
Yeah, it is. It is. Yeah, and we're right in that. And as I keep saying, and I keep saying it repeatedly, don't take my investment advice. Do your own research. Do your own which is what you did. Which is why you looked at Nanadie Well and you thought, and when you see the drill holes, because you've done the research, you go, whoa, like I did. People need to do their own research, and they need to get that feeling for what we're doing. They need to understand this technical stuff as well, because this is quite complicated.
Oh, I think that's just great. What you've done today. Yeah.
And I think when they do and it clicks in, I think then people understand that this is a long play game. It's not a short play game. We're not an explorer who's out drilling holes and you're going to see this immediate uplift, right? And much success to those people, because they've been very successful in discovering some beautiful ore bodies, and you can sit here and name them all. They're fantastic ore bodies, but that's not where we are in the cycle, because when you look at building a mine after you've discovered it in this day and age, you are 4 or 5 years away from doing it. We're not. We're constructing next year because we've already got that established resource.
I think those guys will get to your stage and they'll suffer the same illness, and then there'll be the test of patience as well, and they'll probably having the same kind of discussions we're having now. But that's just the process of the mining game, right? The mining game has always been a marathon, always have, never will change. It doesn't take 2 minutes to dig up something, unless you're in Asia, because they just hire a backhoe and dig it out. But when you look at the kind of operations that we're talking about, it's always a marathon. Never been about a sprint, right? And I think I one of the things I keep talking to people who are on watches Coffee with Samso and things like that is that you've got to do your own research, and you've got to understand it's a marathon and not a sprint. Sprints make a lot of money. You and I would agree on that. And it's not a throw at them. But for us who don't work that fast in our head, a long marathon works for me, But look, I've been really interested to get the real story on Cyprium, because from as I said earlier on, I think you're the only one there, and it's good to understand, because copper is the main game going forward, right? And when you're in South America and exploring, you're 10 years away, approximately, right? If you're lucky. And you guys are probably, don't want to jinx you, but you're significantly less than that at a period of time. Now, what are the market telling you? You talk to all the market guys and money. What's their commentary on copper price and things like that on the copper front?
Well, we're attracting a lot of attention because a lot of people are now copper bulls. Like we are. We're always copper bulls, and it's like we're just talking about with investors. Like you have different degrees of investors. You do still have those people looking for that exploration success, get in and get out. You're looking for those like us who like a project, we get in long term, looking for a long term investment. And then you get sort of those investors that'll let the company mature a bit and maybe make some money, and as soon as they make money, they'll get in and maybe pick up a dividend stream or that capital gain from customer production. So we've sort of moved away from some of that, the fast money, if you like, which we've all been involved in at some time or another, and as you said, been quite successful. We've moved into that, which is what I think our current investor base is, that more stable money that looks long term. And we're starting to talk now to people who are looking for even more stable. So who might go through 3 or 4 meetings over the next 12 or 18 months, wait till they see the picture of the copper plate, and then they're quite willing to make an investment in something that might give them a capital return or something like that. So a bit more, less risk money, if you like. So we're seeing that phase move through. It's the same as we move through the curve. And I think in common, whether it be the smaller investor or the larger investor, they're always saying there isn't many opportunities on the market for this sort of what we're trying to achieve. So it's been interesting, and as I say, I'm into that phase where there's probably a couple of investors. There's going to be 3 or 4 talks over the next 12 months before they sort of make an investment, because they want that more stable, the risk-free type thing, Whereas some of us are a bit more risk not so risk averse. But yeah, that's what I'm seeing. Investors are telling me that we have had a lack of information over the last month, but like I can assure you, we're like working as hard as we can, and there's just...
He was late for the coffee, Samso.
Yeah.
He was working.
I was. But it's because of the way the industry is at the moment, you know, assay delays and getting gear and people and all that. But we are working. There's just nothing to report.
Yeah.
So the things to report are starting to come out, so hopefully we can improve that. But yeah, so they're saying, oh, well, the information flow's been a bit poor, and I apologise for that, but welcome to the mining industry, you know, so we'll try and fix that up a bit. I'm doing another site visit for some of our investors and brokers and things like that, so that'll be good. Get some more people up the site to have a look. So yeah, we're just trying to continue to communicate what we're doing, but the objective, the strategy, you know, the execution of the cold, clear, concise execution of that strategy is still occurring. Never as fast as we want, of course, never as fast as we want, but again, welcome to the mining industry.
Yeah.
It never goes as fast as you want. So
yeah. Oh, look, Barry, thank you for coming in. I mean, look, it's a great way to get a real understanding of what you guys are about. And I think a lot of people still, they understand mining copper and producing copper, but it's good to get a real sort of understanding of the process. And I think that's very, very good. Again, you know, look, let's hope we follow the journey as you go. And no tips to the investors, no secret announcements coming out. They can jump in and buy.
No. They're on the way. But thanks for the opportunity.
All right. Thanks, Barry.
No, it's great.